Hi everyone, welcome to another segment of Mind on Markets. Today we're talking about the stimulus package and what adjustments you should consider making to your investment portfolio. Welcome to YCG, where we help your capital grow so you can achieve your financial goals. If that's something that interests you, then hit that subscribe button and the bell notification so that you don't miss a thing. I'm Will Kruger, CEO here at YCG, and today I'm joined by Brian Yachman, President and Chief Investment Officer, and Elliot Savage, Principal and Portfolio Manager here at YCG. Welcome, guys.
Hey, great to be here.
So Congress is working on another stimulus package, and clearly the markets are tracking this very, very closely. My first question to you guys is, should the government be doing another stimulus package? What are your thoughts?
Yeah, so I would say we don't have very strong thoughts about whether it should happen. And in fact, all we would say is that the Fed and the Treasury and Congress are in a really difficult place, almost a catch-22, because more stimulus means more government debt. And, unfortunately, with our government debt levels at almost 100% of GDP, more debt tends to have long-term deflationary effects. And then, more stimulus also risks blowing up a big asset bubble that then bursts. And, some people would argue we're already in a big asset bubble. And that could cause even more persistent deflation that's really hard to get rid of, which is what happened to Japan after their massive bubble burst in the late 1980s. But on the other hand, if you don't do enough stimulus, then you risk kind of falling into sort of a Great Depression type deflationary spiral. So ultimately, the reason that they're doing the stimulus is both to provide a way for people to kind of get through this difficult time, but then also to try to change the willingness of people to spend and invest. And that's just a very, very difficult problem, and it's very hard to do, as is shown in Japan and Europe, and what the government's tried to do in both of those places over time. And then the other point I would just make is if you provide too much stimulus, then it could even create an inflation that then becomes difficult to control. So it's really all about trying to thread that needle, but it's an incredibly hard problem to solve, and nobody really knows the answer of what to do it. So I really don't envy the Fed and Congress and the job they have. It's very, very difficult.
Yeah, very, very tough. And this is a question that can be long debated for sure. So for those of you watching, leave your comments below. We'd love to hear what your thoughts are on this very question. Brian, what adjustments should people be making with regards to their investment portfolio as it relates to the stimulus package? What do you think?
Well, I think the key to remember here is that stimulus is not the only variable that we're dealing with.
Sure.
There's lots of variables that move markets and change stock price values. And so, not to mention, there's so many first level effects, there's second level effects. So even just trying to predict this sort of stuff is very difficult. And I think you can get caught, on your heels if you're trying to invest purely on this one single variable. Some may try to pick winners and say, well, Walmart's going to do really well with all these stimulus checks, or pick other whatever companies that they think will benefit from it. But, keep in mind that oftentimes these sorts of things should already be priced into the market. And so overall, as we look at it, we say, don't try to make any rash decisions around your portfolio based on this single variable when there's so many different orders of effects that can come into play, and we don't even know how to predict what will exactly happen. So,
and even on a more like stock specific basis, if you told us the earnings results for a company, that many times the way the stock, if we had that the day before earnings, a lot of times the stock still performs incredibly randomly, it's seemingly to us, the next day. And there are all these other variables like the forward guidance they're giving, other things that are happening. So even on that micro level, it's incredibly difficult to predict short-term moves.
Whether macro or micro level. And so I think ultimately, if I were to, make any adjustments based on the stimulus, the only thing I would be thinking about is the comments that Elliot already made, which are, think about how this could affect the overall economy, and is your portfolio robust against many various different types of outcomes. So for example, if you're worried about inflation, maybe you want to have some businesses that could benefit should we have an inflationary shock. Or if you're worried about deflation, do you have something in there that will help protect against a deflationary spiral? So just thinking, I think, broadly, but I wouldn't make any rash decisions or changes.
Great thoughts. So, okay, so this one particular item, you shouldn't be making changes to your investment portfolio or trading strategy. So what does influence the investment strategy from a holistic standpoint? What are your thoughts there?
Well, I mean, just the very fact that how do you make money over the long run is you're able to identify and invest in businesses that can compound at superior rates of return for very long periods of time. And that comes by having businesses that have enduring pricing power. And what we mean by that is that even if you had a virtually identical competitor come along, they are not able to drive down your pricing because there's something special about your business that allows you to charge a premium relative to competition. That's the kind of business we want to own. And so in our viewpoint, we just want to own a portfolio chock full of these global champions that have enduring pricing power with a very long runway for growth. And in an uncertain environment, we think it's important that they're conservatively capitalized. And we especially love it when they have that ownership-minded management team behind it. That to us is not getting caught up in the weeds and the details of what's going to happen to stimulus this week or next week. We just want to know that we take comfort in identifying these businesses and feeling confident that we can compound in these businesses over the long run.
Love it. Thanks, guys. Everyone, leave your comments below. Check out our other videos and like and subscribe if you haven't already. We'll see you next time.